Investor Trade. Going to give you a look at the markets the week ahead, covering the indices and major markets and commodities in this video. I think it's going to be a big week. I think we had a prelude to it on Friday with the big sell-off, and I can see some potential for some more. So really important that we're nimble and agile this week. Don't get fixated on any positions or any thought beliefs, and just process and trade what is in front of us. First chart I want to bring to your attention, we'll start off with is Nasdaq, so US 100. And what you'll see here, going on the daily time frame, all the way back to January 2019, after we'd had a decent period of consolidation here, we then broke out. This period here is nearly a year ago now, when we had a big drop off. So as we're using these trend lines, what I've done is I've copied and cloned down to this end, just to give us a perspective of where we are in the market. Price had a huge move. It's not really gone anywhere apart from up. The only consolidation you had was during this period, which was September. And I'll put the box there. So this was obviously got to these heights, decent sell, and then off it went. From a risk reward perspective, you want to be long in the tech stocks, but right now is a question mark of where you entry. If you've obviously rode that up, brilliant. Are you looking to take some profits, partial profits, and then look to get back in? So I'd look at these and say some of the standout underlying facts for me is the awesome oscillator kind of peaked, which you would expect if this is of some degree a wave one. The awesome oscillator agrees with that. Obviously, we've had a wave two potentially there. Then we've had the biggest bulge of the awesome oscillator is what you would expect in a wave three, which obviously a really big, strong, powerful move. And then you would expect some kind of divergence before the end of a wave count of 5 of some degree. So we can see we've got that. We can also see, if I just double click on here for you, just to zoom in on the RSI, you can also see we've had some divergence there, which is effectively the underlying indicators have got weaker whilst prices continue to get stronger. So there are some reasons to be cautious. If I scroll right back, I don't think the move is completely over, as in, we're not going to see the biggest crash, as a lot of people are saying, kind of just yet. A pullback would seem sensible. The reason for that is it's just overextended. Can definitely go higher. We haven't actually hit a slingshot target of 261 on the fib yet, so I would like to see that before any major sell-off. But there is a question mark whether this is a 1 and a 2, where we were in a 3. If we were in a 3, are we in a 5 of the 3? And if we were to get a waveform, we need to see how price plays out. I'm not predicting that, but we would need to see how price plays out. Maybe, just maybe we would see some sort of sideways consolidation, perhaps. Maybe we'll see the price come these ways, maybe it'll come down, up, back down, and slowly work its way across. There's a lot of uncertainty, fundamentally in America at the moment. So we'll see what happens this week. But this is a really interesting potential chart pattern. Again, the Elliott wave theory would be wave 2 and wave 4 structures are opposite. So wave 2 had a very violent drop, and then wave 4 would tend to suggest it's more sideways, which could be a simple correction that way, or potentially a double correction. But I think anybody that is a bull or long-term, bullish on Nasdaq would, common sense, have some concerns that here with the underlying weakness. Again, long term, not so much of an issue. But if I just show you that since the 20th of March lows, we've had a staggering, it's almost 100%, just under 100% increase on Nasdaq. So at some point you're going to want to see some profit taken, sell at the top, buy at the bottom, and then repeat the cycle. So caution there on Nasdaq. This is really supported. This is the FANG stocks. So obviously the Facebooks and the Amazons and Netflix and Googles of this world. We've had a beautiful channel which we've been monitoring really, really closely since the March lows. You'll see that's the March low here. Prices come up, and on the 1st of September again, which seems to be a key date for a lot of the markets. 1st of September, remember that. You've got 261 fib slingshot was hit. Since then, it's been unable to take out the high. We've got big support down here, and it's actually, more importantly, broken down the rising channel. So FANG supports Nasdaq and a lot of the indices. And again, you'll see, you know, it's getting weaker there. Price hasn't been able to get higher. It's just got weaker. So there's no surprise there. Initially, we want to see it come down, you know, at least test this support. For example, if we put a simple Fibonacci on, just combining March lows to the recent high. If, again, for example, this is a wave 4 of some degree, if this was a, you know, big wave 1 up, 2, 3, this could be a complex 4 because that was a zigzag, so it could be an A, B, and then back down for a C. We would be looking at the 38% fib to, well, 23 to 50, but generally I always find tying in with these major supports here. Okay, if I tie in those major supports, you've got it's between 38 and 40, which could be a perfect way forward, could be a more complex. Again, we could start putting in some trend lines just to see where it goes. It could be a huge bull flag in the making. Potentially, if it goes down now, could easily do that. You can see nice pole come up. You get an A, B, and the C back down, and then up it goes again for new all-time highs potentially. So keep an eye on FANG. For the S&P, just want to show you on the weekly scale, the S&P potentially a lot higher. It can still go a lot higher. Could have, obviously, I will zoom in and show you potential pullback that we think. But again, looking at the slingshot, if this was 1 and ABC for 2, and we're in a big grand super cycle 3, 4386 potentially target, which also ties in with the initial slingshot up here, 1618, 1786, and then potentially higher. That would also tie in, you know, potentially nicely with if this channel is true, and we've got a few touch points that make it valid. We've been hugging the lower end of it actually. If we get loads of debt and stimulus pumped into it, then despite the real economy shrinking and getting smaller, what you can't see is that money moving into stocks, and you could see that potentially, you know, just going up. But before we get too carried away, we'll zoom in, just have a quick look at the 4-hour chart. And one of the big things you need to be aware of is, you know, this rising wedge pattern. Rising wedges need to have the underlying indicator support them to be valid, because rising wedges can break to the upside. Quite often what you'll get is an overthrow. So you've had the overthrow here before price breaks down. You never buy the breakout. You would always wait for the retest. That limits your loss or potential loss if it is a fake or false breakout. But again, if we just put in very, very basic chart pattern, I can, you know, not just be reliant on one trend line. Consider that for the 2. What you want to see is actually the weakness again. So as prices go higher, the underlying indicators get weaker. So we'll put that there. Again, even here at this point, so it get weaker. We've had an overthrow, which is perfect, and then comes down. What you should see in the ending diagonal is it's subdivided into effectively 3 waves, 5 3-wave movements, which we do have here. 1, 2, 3, 1, 2, 3, 1, 2, 3, and it gets messy. That's how you know it gets really messy, congested. Sometimes trading these tight zones are you know, kamikaze mission, because your the reward is small. You need to wait for breakout, pullback, retest. What you would want to see here, the apex is always a target, which again comes here, and we've had the price there. So if I have 1 attempt, 2 attempts, drop. What I want to do, if I want to trade this, I want to see the breakdown, which we started to get. Now this could just go, okay, and again the target, we can zoom out, we can put a fib in, which I would suggest comes at the top there. Comes here. We can start looking at potential targets. 38.2 again ties in with major double support. From here, also the ending diagonals, falling wedges, rising wedges, depending on whether it's bullish or bearish, can generally go back to the beginning of the chart pattern. So we should be looking at that. We've got double support, major support down there. It's quite a long way from where it is at the moment, so you know, I wouldn't pin your hopes on when you say price plays out. If it goes down, I suggest there's another buying opportunity. But what you can see is price can just drop. Ideally, the other option, which is always good to trade, price comes back, retests from underneath, and then goes. Okay, so you would sell on this one. The problem you've got is if you start trying to sell the first move, okay, there, if price reverse on you, blows your stop loss unless you've got big account and then drops. So if it just drops, then you're better to say, well, I've missed that one. You know, it's missed it. It's a lot less risky than gambling to try and hope that it's going to keep dropping and then up it goes. If it was to drop and break down from here, probably be quite quick. And then again, we'll be looking at, you know, some of these initial targets where we find some big support before. So keep an eye on those, and that's what you want to do on your own charts, ready, preparing on the weekend for the week ahead. Dow Jones Transport is really interesting. This was our chart from sort of 2 weeks ago where we said it, one of our main targets. If I go back on the weekly, you'll see we've got loads of touch points, very, very valid channel. Again, just to show how insane it's been from March. Look at that line. I mean, it's a huge increase, massive. If I give you some context to that, we've covered, that's, where are we? That's 104% up from March, and it's not taken too long at all. It's less than a year then, okay? So that's big. One of the reasons I don't think this is the end of all the cycles, and the big crash that everyone's talking about, or seems to talk about every week, is you don't have any divergence here. So again, this looks like I would argue this is a double correction, potentially a wave 4. What you want to see, maybe this is a big wave 1 of a big wave 5. We'll see, time will tell, but there's no real divergence to talk about on the weekly. If we zoom in on the daily, then we'll see more divergence, which we would expect, and then hence you should probably get a decent pullback, arguably before it goes back up again. So that's Dow Jones Transport, which is really, really important for Wall Street Dow Jones. I'm going to show you one of these. Everyone's been talking about the expanded microphone chart pattern for well, it feels like a few years now. But as it's been developing, we've been watching it. What you've got again is a lot of people calling the breakout because it came above there. But when in a chart pattern, when you have an overshoot one side, which we've got, okay, so you join these lines and you get an overshoot, you generally have the same magnitude or roughly the same magnitude on the other side, which comes up here. So again, it could be a false breakout. What I would say to you is the underlying indicators. That's the big awesome oscillator move there. Comes down here, bang. So we've got some reasons to be concerned. Again, if I zoom in on hourly 4, just to show you this rising wedge pattern, 1, 2, 3, and then comes up, gets messy. We've had an overshoot. So again, it's not a short signal. You don't want to short it too early and get burnt, but you can definitely see when price is going to put a price label. Friday's low bounced off the trend line 36.43. Below there, you've got a real big question mark about whether the market again just drops, or whether we get drop, then it comes back, retest. You would enter the sell as close to that line as possible, and then go. Again, you can use your Fibonacci, your targets. It's interesting when all the markets kind of line up and they're all saying the same thing. It kind of gives you more confidence and trade them or take profit if you're long. And again, we can start marking these out. Again, absolutely brilliant that on Wall Street, we've got double major support. These areas, again, they're slightly different chart pattern, but exactly the same. Double bangs, bang, up we go. And it ties in with a 38% Fibonacci level of the whole move. So that's really going to be interesting. FTSE is a strange one because we've had this now for months. The target to come back up for an equal leg back up, maybe as a 1, 2, 3 of some degree. Various fibs all line up. Previous support was here, so we'd want to test from underneath, see if it would now be resistance. Equal leg to come here. All ties up with actually about between 7,100 and 7,200. But with the other potential markets looking to sell, we need to really keep an eye on FTSE to see whether it's going to outperform the US markets, short term at least. So keep an eye on that. DAX, again, similar chart pattern here. You can see we've had this rising wedge pattern building, getting tighter. Classic overthrow, comes back in, starts dropping. Now, the target of these are actually apexes, the apex of the triangle, which is higher up. So there's no guarantee this is going to drop. Again, the way to trade it, ideally, is drop up, come back down. A fib of just a rising wedge, even at 50%, gives you a sizable drop. If we were, again, the rising wedge is not ending diagonal, normally a reversal pattern. So the market's reverse. The apex is obviously higher, like 4. If I would make that exact, actually, if I put that apex target coming about 14,300, which potentially could take out stop losses of people who sold at the top. So there's no, it could do something like this. Could come down, false breakdown, come back up to the apex before any decent drop. So it could do that. So again, you need to be very careful shorting any kind of breakout because it can fail. What you will clearly notice, but the biggest move here for awesome oscillator just got weaker. And again, RSI, the high point of RSI was here, just gets weaker. So when you've got prices going up and underlying indicators getting weaker, especially on a bigger time frame, it's a warning sign that things can change. Gold, have a look at gold. I'm not changing the charts for gold. It's worked, over a year now. And again, we wanted, these were previous highs, so we would expect price after an overshoot to come back to test. So far, so good. It's supporting it. Awesome oscillators, no divergence. So this is a healthy pullback in gold. In my opinion, there's no reason that you always look for these previous resistance zones to then act as support. So far, it's acting as support. No, we're still in an up channel. So again, you want to buy low with gold. That's the target. Silver, we've had this. Just remove this Fibonacci for you. Go back on the weekly. It hasn't gone anywhere near the all-time high, so it's got some catching up to do. So you can see, remember that previous chart, gold's actually broken well above these levels and retested. To give you an idea, silver all-time high, about 50. Let's call it 50. And second peak 44. So what we really want to see on silver is to break above and then test from below. That's like double where it is at the moment. So potential, and it's already had a huge move this year. Silver anyway. Are there warning signs? Well, we don't have divergence. Okay, awesome oscillator got weaker, but so did price. So it's mapping it perfectly. RSI exactly the same. Chart pattern we've got there is a bull flag. What we would expect on a bull flag. Price breaks out, comes back, retests, and off it goes. So anywhere, 23s, would be a potentially good buy. Obviously, that's not a recommendation, but you need to do your own due diligence on that. But for me, that's what I would like to see from an analytical perspective, is price come back down and then off it goes. Oil, this was one of the charts we released before. You can keep a good eye. But a major trend line all the way back to 2008. Price comes down. Sells off it. What you're looking at actually is this green box. So major support across here. Resistance there, comes down, trying to be a support, falls away. Potential bear flag you can see that was being created. This is a weekly time frame, so huge time frames. Is that bear flag completion? And then up we go, and needed that to now really smash it higher. What do we see on oil? We see positive divergence, which means price come lower, awesome oscillator stronger, so it should go up. I mean, it even comes from there. This was the low. Trend line. There's the low. There's that. So you can see. Seems odd because obviously the planet's trying to go green and all the rest of it, but actually, from this perspective, what we want to see is what happens when it gets up to here. 55 level is going to be key. I mean, these anywhere in this green box is actually key. Will we just see a complete, another leg down? Or will we see, will it just break right above? If I'm trading this is a no trade zone for me. Right now on oil, I would either be looking to sell here, with obviously stop losses up here, sell the market back down. But because of the big positive divergence on the weekly, a bit nervous there, I wouldn't really want to trade it. So finally, just